Gautam Mehra here, and welcome to this special edition of Manthan. I think at the start, we must all, congratulate SEBI for this wonderful initiative, and I see the SEBI representative there. Would you like to just kickstart this?
Thank you so much, Mr. Gautam, and welcome to the session. Good morning, everyone, and welcome to the second knowledge series organized by SEBI as part of the Manthan Ideathon program. My name is Sumit, and I head the fintech initiatives at Startup Reso. And so SEBI launched this the Manthan program in association with BSC, NSC, NSDL, CDSL, K Fintech, CAMS, Lincoln Time, MCX, and NCDEX. And it's the overall idea is it's a 6 weeks Ideathon program, which was launched on 30th of March. So I'll quickly run through a couple of details which talks more about the program and what we have done so far. So, as I mentioned, this program comprises of as an Ideathon challenge, which takes up across 4 major themes. One becomes investor education, protection, and ease of investing. The second becomes securities market development. The third becomes market regulation, and the fourth becomes integrating with the financial ecosystems. So this overall program, the objective is to collect ideas from innovators present in the audience and within the ecosystem. And the objective is to how we can foster innovation within the overall capital markets as a domain across all the 4 verticals that I mentioned. And in terms of major giveaways for this program, these are the prizes that are up for grab, including participation certificates from SEBI, as well as some surprising, exciting goodies from SEBI's side, which will be directly delivered to all the registered participants. In terms of the timelines, so we already launched this program on 30th of March. We had our first an amazing masterclass, which was a huge grand success on 9th of April. We are present here at the second masterclass on 23rd of April. And we also have the 2 other masterclass follow on, with the final deadline being 14th of May. But make sure that you are submitting your ideas well before that, because we already have 1,300 plus registered participants submitting their ideas. So make sure you are among the first ones to submit your ideas. In terms of who should be applying there, we are looking to interact with all the ecosystem enablers, startups, finance enthusiasts, management candidates, and professionals where your idea can practically solve a problem in a capital markets domain across verticals. So with that, I would like to welcome Mr. Gautam Mehra. Mr. Gautam is the partner at PwC and sorry. So Mr. Gautam is the partner at PwC, and Mr. Gautam is a qualified chartered accountant and since 1987, and he had stints with 2 leading accounting firms and tax consulting firms, which was followed by a long association of over 12 plus years with independent practices. That was founded by him. He joined PwC as a partner in September 2003, and since then he has had various roles. He presently leads the PwC's global relationship for one of the India's largest conglomerates. Over the years, Mr. Gautam has been working with multinationals and domestic clients across wide spectrum of services and has varied experience over 30 years spanning multiple sectors. Mr. Gautam is presently a member of SEBI's Alternative Investment Policy Advisory Committee, as well as SEBI's working group around REITs and InvITs. So with that, without further ado, I would like to hand over the mic to Mr. Gautam to talk about enhancing reach for other investment products like REITs, InvITs, and taxation for the fintech domain. Over to you, Mr. Gautam.
Thank you so much for those kind words. I think it's just a reflection of how old I am, if I can put a lighter on. But on this Saturday morning, it's a pleasure to speaking to all of you on 2 very unrelated topics, and in a time frame one could spend half a day on each one of them, but I'm going to summarize this in the next 30 minutes, so about 15 odd minutes for each of the 2 topics. Like I said, really congratulations to SEBI for, as a regulator, to initiate this ideation piece. And the idea of this session is to just empower you a bit to get you to know what is a REIT and InvIT, in what situations it could apply, where could you use those ideas and thoughts. And on an entirely different note, since fintech is the way forward, what should be those 2 or 3 pieces around tax that you should be familiar with, or you should say, yes, I have gone through that, I'm aware of that, I will tick the boxes and I will take advice from the respective specialists in the field. So with that, let me kickstart it with the REIT and InvIT piece. And before I move on to taxation of fintechs. On REITs and InvITs, I'm just going to be talking through the what, the why, and the how. What is a REIT InvIT? Why and where can you apply the idea of a REIT InvIT and use it? And how is this whole system of the finance around it? In very simple terms, a REIT and InvIT, which is the short form for Real Estate Investment Trust and Infrastructure Investment Trust. It's nothing but not unlike a mutual fund where a regulated collective investment vehicle, it could be listed or unlisted, and which is pooling money primarily for the purpose of developing in predefined real estate or infrastructure. The speciality about this vehicle is that by law, it is required to periodically distribute the income to investors. 90% of the income every year has to be necessarily distributed. And because it is predefined, developed real estate and infrastructure, at the back end, there is a steady source of regular income, either in the form of rents or in the form of, let's say, road tolls from the roads or the other infrastructure assets which are there. So that very simple terms, that's what a REIT and InvIT is. This should give you some idea of the size and level of opportunity of REITs and InvITs in India, especially given the $5 trillion dream that we have and the kind of focus on infrastructure which is presently there. I can pause and tell you that while the Indian REITs and InvITs has been around for the last 3 or 4 years only, we as a country have come onto the global map, and we have made, I would say, significant progress compared to our peers across the globe if you compare the initial journey. So lots of ideas to be put around this. This being the broad journey, right from 2013 when the consultation paper was put together by SEBI to 2016 when to 14 when the final regulations came in. And as you can see, in 2018, we had the first InvIT, new InvIT, and 3 listed REITs are presently there. Very simply, this is how the structure looks like. The orange triangle in the middle is the trust, which is the real estate investment trust or the infrastructure trust. Typically set up by a sponsor. There are investors from whom money is pooled. There is an independent trustee who takes care of the interest of the investors. The REIT or InvIT typically appoints a manager to manage the assets. And as you can see below are the various assets. They could be a predefined, commercial real estate. That's what's there in each of the 3 listed REITs which are there right now. Or there could be various types of infrastructure assets. You may have heard that Power Grid and National Highway Authority of India InvIT have been formed. And that's just a precursor to what are the kind of assets and the kind of investments that can be pulled into this space. Just for those of you who need to know about how the finances have worked out, we pulled out some data for the 3 listed REITs, Embassy, Mindspace, and Brookfield. That's how they came out in this order of space. Embassy was the first. Mindspace coincidentally came out after COVID came in, and they were oversubscribed 17 times in the midst of COVID. Brookfield, the latest entrant into the space. These are the kind of yields that are available. And the investor class for this is a bit different. It's not about those more, risky investments where you are taking a development risk. This is more stable returns backed by developed assets. So you're looking at these average annualized yields. Uh, in addition to this, there is also the possibility of growth of the value of the real estate and thereby increase in rents over a period of time. So one could expect over a fairly longish period, a higher average annualized rate. Pension funds, insurance companies, large institutional investors, and retail investors who are looking for steady and relatively safer flows of income. That's the kind of investors whom this is targeted for. Not going to go through details, but very broadly, REITs on the left and InvITs on the right, these are the kind of assets which can fall under each of these two categories. The good part is the regulations require on the real estate side at least 80% of the corpus to be invested in completed assets. So no risks of some approvals not coming through, etc. And at least half of that should have been given out on rentals before an asset can be swapped into a REIT. Likewise, in infrastructure, while we've seen transport and we've seen energy and we've seen the roads, NHAI and Power Grid that have come in. We just had a conference on this, a global conference a couple of days back. There were representatives from the Department of Economic Affairs and of course from SEBI. And I did happen to ask the joint secretary there saying, what could be the other kind of assets that could come into the space from a government monetization perspective? And one was looking at things like power, and various other things that fall in these cases. So look out for the space, lots to happen over here. Again, very broadly, while REITs can only be one category of REITs which are listed on the stock exchange, which are called listed REITs. As far as the infrastructure side goes, there's a little more flexibility in how you can think through these assets. They are, of course, the publicly offered infrastructure trust. There are privately placed listed InvITs. So you go for a listing, don't have to do an IPO. It can be a privately placed piece. Or you could have an entirely privately placed unlisted InvIT. Right. So the number of investors and the kind of size and scale is mentioned over here, but just gives you an idea of what you could think through. A little more in detail, the asset size clearly needs to be at least 500 crores across a variety of assets. And well, why not think of a large corporate having a marquee office building in any of the metros, and they may want to put that out in a REIT. Those are kind of assets which could easily cross the threshold limit of the 500 crores that is put out over here. There is a bit of minimum public float. You have to divest at least 25%. The sponsors will have to put out at least 25% float. And there is also, keeping in mind the safety for investors and the kind of returns and the kind of investors that are looked into, a restriction on the leverage that can be taken at a REIT or an InvIT level. These are, regulations by SEBI put in place to ensure that interest of the investors are kept in. So who can be a sponsor, who could be a manager, who could be a trustee, well regulated. And over the last 3 years, the things have played out. These things have lived up to expectations. Generally, the impression from the outside, the impression from investors is this is a good working model. I can tell you, I was coordinating a regional seminar with participants from various countries in Asia which have REITs: Japan, Australia, Singapore, Hong Kong. And the one piece that came out to me, I said, what's the differentiator between India and the rest of the countries? And they said, you have a very positive and proactive regulator and a good set of regulations in place. So friends, you've got that wind in your sails, if I may call it, to think through about where can these ideas be taken. The why, I think this is probably the most important slide if you were to think about how do I take this idea and where do I take this idea? Look, there are advantages both from an investor's and a society perspective. But if you look at sponsors who are typically the asset owners, this is a fantastic opportunity to unlock value in the hands of the sponsors. The sponsors may decide to retain control by having control of the manager of the REIT or the InvIT. But since they have to divest a minimum of 25% and they can go to a divestment of a much larger amount, there could be a lot of liquidity cropping in place as well. That asset or the monies that come in through divestment of these assets can be deployed by the business for earning returns, which are higher than the returns that are paid out through the yields. As I said, you're looking at 6-7% yield returns that are going out. So if you think your capital can earn you more, and in most businesses, capital does land up earning more than the rent being paid, this is a great way to redeploy that capital, free up that capital, and put it in the business, and thereby generate better returns for shareholders, for different stakeholders in a very regulated, developed model. So I'll leave that thought with you because, like I said, this is probably the most important piece when you are looking at it from an ideation perspective. I'm going to end this with just the how. I did show you the diagram in the front, which talks about how the structure looks like. And there was a bit of, if I'll say, time to roll out the REITs and InvITs because of certain creases that had to be ironed out as far as tax implications went through. And the good part of the story is those creases have been by and large ironed out. You can see the success story of the 3 REITs which are there. But as you're looking at this product, as you're looking to take this idea out, you just need to have an overall glimpse about how would the tax implications flow as well, so that you can factor that into your back of the envelope calculations at this point of time, or even more detailed workings if required. A bit of complex thing. There are almost, you see, more than 15 sections introduced in the Income Tax Act to deal with REITs and InvITs. But let me just simplify it for you. And this will also give you an idea, not just about the tax, but what are the financial transactions that happen in REIT or an InvIT structure. You've got 3 sets of stakeholders. You have the unit holders, the investors in the REITs or InvITs. Then you have the vehicle itself. And then below the vehicle, as is typically found in these models, instead of having the assets directly held under a REIT or InvIT, there would be a company or an SPV, a special purpose vehicle, set up to hold one asset or a multitude of assets. And one may have multiple SPVs sitting below a REIT or InvIT. So clearly at the SPV level, you could have a sale of the assets which are held by the SPV directly. You could have the SPV earning the rentals or the road tolls, and then post payment of taxes, distributing this as dividend up to the REIT and then onto the unit holders. As I mentioned, 90% of the annual income has to flow through to the investors on an annual basis. Or you could have the REIT or InvIT pumping down a bit of the capital into the SPV as a mixture of capital and loans, and the SPV paying out the interest to the REIT on the loan portion of the capital that is funded up. So that's broadly, and of course, then you have rents, if at all, which are earned by the REITs for assets held directly by them. But we've not seen that as a practical model so far, so I'm not going to focus much on that. At the REIT InvIT level, what are the sources of income? The REIT InvIT itself may sell the shares of some of the SPVs when they're exiting out of these assets, or not yet seen, but they could be holding property directly and have capital gains from sale of the property. There's, of course, dividend received from the SPV, which goes up to the unit holders. There is interest received from the SPV, goes up to the unit holders. And there's rent received from assets, which again goes up to the unit holders. Clear, simple. I don't think there's much complexity in this. At the unit holders level, what could be the financial transactions? There could be a swap of units at the time of setup. And this is important from a sponsor perspective and from you to understand that the tax regime as it is set up. If you are an owner of assets and you swap the assets into a REIT or InvIT, you do not pay any income tax at the time of the swap. So it's a fairly tax neutral way of setting up a REIT and InvIT. And you don't end up paying tax till you don't actually encash the units and get money in your bank. So with this, I'm just going to put the tax on a slide for you. You don't need to be bothered about the details, but taxation is, as the income flows into the hands of unit holders, they'll end up paying the tax that is there. It's a fairly pass-through vehicle concept. I think the only column I would ask you to focus on is the third one, which talks about whether SPV is under the old regime of taxation, which means it pays tax at the higher rates as compared to the 25% rate that has been reduced now for domestic companies. In such a case, if the SPV earns the income and pays the tax on that, then the entire flow of income from the SPV to the REIT InvIT in the form of dividends, from the REIT InvIT to the unit holders in the form of dividends is entirely exempt. This still continues to be a dividend income in the hands of the investors, which is exempt from tax. I think that's the piece that I will leave you with. So that's about it on the REITs and InvITs. I think we are 15 minutes through on this. These are some of the asks that the industry have and a lot of changes that SEBI has proactively been making. One of the industry asks, which could be looked at, is the issue of ESOPs to the members and the manager of the REITs or InvITs, right? Or team members over there. And I bring that on board because obviously there are innovators and startups over here. So that's something which could be of interest. So friends, that is about REITs or InvITs. I think we are quite on time so far. I don't know if they have the ability to take any questions now, but maybe given the short time frame and the piece on fintech taxation, you could probably put in your questions in. We'll try and cull it out together and get back to you either at the end of the session or then at a later point of time. So shifting gears, fintech taxation, and why we put only the tax part of fintech in this, unlike in the REITs and InvITs where we gave you the largest scheme of things about what is a REIT and InvIT. I think the participants here, especially if you are the ideators, you probably know more of fintech than a lot of us who will be talking today. And therefore, I thought it best to focus on making you aware of the different aspects of taxation which are very specific to fintech. Tax, of course, is one of the two essentials of life, as one of the old writers put it. So let's see what the tax world of fintech looks like. You're probably more familiar on this than me, but I think the key takeaway here is this is an extremely fast changing model. Tax laws in India and over the world have been written up decades ago and were written up to meet the needs of businesses and transactions at that point of time. Clearly, some of these are outlived. I don't know how many of you are aware, but at a global level, the OECD understood the importance of getting the tax systems globally up to speed with what is happening in the space, generally in the digital space. And you may come across the terms Pillar 1, Pillar 2, but essentially it talks about how should countries be thinking of taxing digital transactions in today's day and age. There is a focus, and one of the pillars talks about focusing on market presence. And historically, you may have a manufacturer sitting in US who's manufacturing stuff there, and he pays all his tax only in US, irrespective of where he sells to. But under the digital OECD model, which is being proposed, there will be an allocation of the profits of this historical manufacturer, now a digital manufacturer, allocation of the profits to the country where the users are located. And India could be one such large country. And therefore, India standing up and saying, we need to have a right to tax some of this income, which in the historic days, we did not. That's the big picture. And keeping that in mind, then you'll probably be able to better understand some of the things that we go through right now. I'm not going to talk about the general stuff of taxation. You know, the entities, the different type of rates. I'm presuming that that is something that you would be aware of. We have the new regime now, which talks of the 25% rate. There was the old regime. You don't want to claim deductions, you pay the higher rate. And then you've got the tax rates applicable to limited liability partnerships, partnership firms. If you're operating the business as an individual, that's the broad scale of things that we've. And of course, GST, 18% applicable across most of the board. But there are 4 things that are specific to fintech taxation, which I thought you should be aware of if you're thinking through ideas. One is a bit of complexity on withholding tax. The other is something called equalization levy. The third is virtual digital asset tax, which was introduced in this budget. And the fourth, a couple of points around GST that as you think through these items, you should make sure you tick the boxes. And that's what I'm going to focus on over the next 5-10 minutes before I close this session. Withholding tax. So there's a specific provision around e-commerce, which mandate a 1% tax to be withheld. There could be other provisions as well, which apply depending on the nature of the transaction. So for example, there are withholding tax provisions around commission or brokerage. And depending on who's the intermediary, what's the kind of the contract, does the payment qualify as something that is purely as e-commerce payment, or is it in the nature of a commission or brokerage? I think that's something that you should be careful about. There are also provisions around fees for professional or technical services. And again, depending on what you're proposing to do, one would just have to be careful on what these provisions, what are the tax rates that could be applicable, withholding tax rates that could be applicable. I'm not going to be, talking through this in detail because it's quite a complex subject, but if I can just give you so this is a, screen of the various types of TDS sections that could be there. What could be the different types of income streams, fees on the transaction, commission, interest, sale, licensing of data, ad revenues, and the various different kind of provisions that could be applicable. So I think suffice for you to know now that, yes, withholding tax is something that I just need to make sure I tick the box on, whether it's a 1% under the regular e-commerce provisions or something that needs further deliberation. Generally, the impression is, withholding tax is a cost, right? And I need to factor that in when I'm doing my business model. Well, friends, it is not. It need not necessarily be a cost. Withholding tax certainly is something that will be considered in your cash flows, but whether or not it is a cost is something that needs to be determined independently. So you could have a situation where withholding tax gets blocked and becomes part of the working capital, but it could be released at a later point of time after you file your tax returns if that tax is not ultimately found to be held payable. I think just keep that in mind because it could impact the way you go about, sometimes working your business models. There is a procedure under tax laws to seek an exemption or dispensation from withholding tax if you think tax should not be applicable on the way your business model works. But that would require time and effort, and it does take some convincing to be able to pull out a certificate from the tax department that no tax is to be withheld, and rightly so. I think the government is keen to ensure that the tax net is widened, and they would not like to see any leakages. It's not just for domestic, but also cross-border payments, which are equally impacted. And there are some ambiguities, in the procedural requirements, especially for intermediaries. If you are acting as the liaison between an overseas parent or a principal and customers in India. So keep those in mind when you're looking at withholding tax. Equalization levy, an interesting term. I spoke to you about the global developments about OECD and the right of the market users to charge tax and get their share of tax. And honestly, this was in a limbo for a few years. And while it was in a limbo and some countries, globally not able to come to a common standing board on it, a few countries like India stood up and said, look, if you're not going to get consensus at a global level, at least I'm going to stand up and do a unilateral action and levy a tax at my own end. And that's where equalization levy came in. India was probably the first country in the world to do that. It basically, at the time it started, it was a levy of tax on ad revenues, largely around that. But one thing led to another. And now equalization levy in its present form is at 2%. It's applicable on non-resident e-commerce operators or online sale of goods or provision of services. But if you're here in India, you should be careful to see that when you're contracting with any overseas operator, who bears the levy of this equalization levy in the commercial discussions that you're having. It could be the case that this cost is factored in and passed on to you. So that's something that you need to bear in mind. The scope of these provisions and the way the provisions are written are very wide. It talks of e-commerce, and there are some basic fundamental questions coming up saying, look, if I interact on an email, is that also covered under the definition of these provisions, the way they are written? Well, for a newcomer who just has a plain and simple look at the way the law is written and tries to analyze it and say, yeah, well, an email communication could also attract equalization levy. But our understanding is that's not the intent of the law. The intent of the law is actually to levy this tax on e-commerce, more to say, rather than just doing anything through a digital mode. I think the other point at a more larger perspective to remember is once the OECD model and agreement is there globally on this, the need for continuing with this equalization levy will have to be tested, and maybe we may see some relief at that time. Towards the last slide, virtual digital assets. This is the one which got maximum headlines. The government did levy a tax on any gains arising from the transfer of any virtual digital asset. It's at 30%. Now, normally when you're paying tax, you get an offset for all the expenses you've incurred to earn the income. In this case, other than if you've actually purchased the virtual digital asset and paid a cost for it, no other expenditure is allowed. So if it's self-generated and you probably had expenditure on technology, some workforce, etc., to develop it, sorry, none of those expenses are going to be allowed. And if you have income on one of the virtual digital assets and a loss on the other, the loss is going to be ignored. Just pay tax on the income. The scope of the virtual digital asset is pretty wide. Again, at first glance, questions may arise: are gift cards and coupons also part of that? My sense is the intent doesn't seem to be that. It is to tax income from VDAs the way one would understand it. One can argue that this doesn't sound very logical. I think given the fact that the intent is not to encourage these kind of crypto tradings, etc. Therefore, the law has been worded in a bit of a harsh manner. And maybe I'll just flash the definition of the virtual digital asset the way it was contained in the finance bill for a second or two. Right. So as you can see, NFTs are included. Any information, code, number, or token, right, generated through crypto means, right, and which provides a digital rep. All of these are covered. So coming back, that's the VDA and the last pass on GST before I hand over back to the organizers. The regular provisions of GST are applicable. So 18% tax, you provide services, you get offsets for inputs, and you collect paying the tax on the value add that's happened at your end, right? Plain and simple. The complexities that you need to be aware of, if there are marketing arrangements, barters, cashbacks, discounts, that's when tax law gets a little more complex. If you are making payments to an overseas supplier or vendor, and you are withholding your fees from those payments that is going out. So you're acting like an intermediary, money comes in, you pay out, you withhold your fees. You may not get the benefit of exports because one of the conditions is that it has to involve remittance of money into India. In this case, you are deducting it from monies that are to be sent out. So how do you structure around that? Make sure you don't become an intermediary service when you're acting as a conduit between or a liaison or any kind of arrangement between an overseas vendor and a domestic customer. So with that, I am going to stop sharing my screen. I know it's a lot to digest in 15 minutes. Each one of these could easily take a day, but hope I've tried to do some and managed to do some justice to it. Over back to you. Thanks.
Thank you so much, Mr. Gautam, for that amazing insights around REITs, InvITs, as well as the taxation component around fintech, as well as virtual digital assets as well. It was really fascinating that you touched upon a lot of important points throughout the session. I already have a couple of interesting questions on the question tab along at my side. So I'll just start taking a couple of them, and also audience members, if you have any other questions as well, you can either raise your hands or put it in the Q&A tab below. So I have a question from Mr. Rakesh, and Rakesh asks, are there any capital protection around REITs and InvITs?
No, this is a market instrument. I think while there is no capital protection, where investors have found comfort is this is a regulated vehicle. Under the regulations, the entities are not permitted to invest in developing assets where there are more risk-taking abilities. So 80% has to be in completed assets. The regulations require mandatorily dividend income to be distributed 90% year on year. And given all of this stuff, very conservative investors like pension funds, insurance companies, and I would say retail investors who are looking at asset-backed, this is all backed by assets. There's nothing on paper behind. You have hardcore assets behind. So it's a good diversification from your traditional fixed deposit investments, right, which are there. And the track record has been fairly good, at least as far as the players in India are concerned. So Rakesh, I hope that answers your question.
Great. I think that was a quite a detailed overview in terms of what exactly is required around capital protection. But yes, I'll quickly move ahead with a couple of other questions as well. I have a question from Sujit. So he answers that, is there any threshold amount one should have to invest in REITs or InvITs? If yes, what is the threshold amount?
Yeah, so SEBI has proactively reduced the threshold. If I recollect from memory, I think it's about 1 lakh. I may be a bit wrong, sorry. But it has come into a investable range. I can clearly tell you the intent, and we have a lot of encouragement from the regulators of making this a product which is available to the masses. Purchase of real estate is probably by a select few, but this model was put in place to ensure that the man on the street is able to participate in the capital appreciation and all the good things that are happening on the real estate side, as well as in some of the large infra. I would say between the two, real estate is probably the more easier one for the retails. Infrastructure, largely sophisticated, large investors, given the volumes involved. But clearly, we have seen retail participation in the REITs, and the mood is clearly to encourage that even more and find out ways and means of how one can do it. And if you've got ideas around that, I think SEBI would be very, very happy to hear about it.
Yes, absolutely. I think these are in fact, the emerging segments that we want participants to submit their ideas around. And yes, just to quickly move ahead with the I have a lot of questions, but I'm just trying to prioritize quickly. I have an interesting question from Mr. Ganguly. It's around VDAs that we already discussed. So there is still a lot of ambiguity around its taxation, but like since a lot has been major economies are adopting VDAs on a very large scale, will there be any progress in adopting them, and like they will be taxed in a more reasonable rates over a period of time? What's your take on that?
I think it's going to be aligned with the overall general intent of the government on whether they want to, encourage. And I think as the space gets more regulated, one would probably move towards a system of taxation which is aligned with the tax rates on the rest of the income that you earn. But let's understand, today it's a fairly unregulated space as far as, if I were to put myself in government shoes, and if I don't want to encourage that, unless I get a bit more handle and make sure that there are very few possibilities of misusing this, I think regulations, whether it is tax regulations or other regulations, they would not be encouraging of these transactions. And therefore, you've seen the piece that we have here, 30% without any deductions, etc. So let's wait for the space to get a bit more regulated, a little more matured, and then one can look at, expect to see better tax rates as well.
Absolutely. And it's really fascinating that Indian regulators are taking active measures in terms of policy recommendations, internal deliberations around all these emerging technology areas in terms of how they can adopt well. And it's not about restricting them, but it's about how they can regulate better so that innovation within this ecosystem can foster at a much faster pace over a period of time. And that's quite a amazing thing which Indian regulators are doing. And with that, I think I will take like one interesting question from Anup that I can see. So we already discussed that REITs and InvITs, most of them are like backed by assets. So how does it affect when in case of the builder's bankruptcy? Like how does the unit holders gets affected once builders get bankrupt?
This was in the context of REITs.
That's right. So,
Right.
so in the context of REITs and InvITs, how does the bankruptcy affects the unit holders?
So, the beauty of this is when you're putting assets into the REITs or InvITs, right? Assuming it is sitting as part of a large builders group, the developer or builder, the owner of the asset, has to carve that asset out from the main entity and put it into this under the separate vehicle of the REIT or the InvIT. And therefore it gets separated. There is probably no linkage back. The ownership rests with the REITs and InvITs. It's managed independently. There's a board of trustees, and it's about tenants and the income coming in from the tenants. So assuming for a moment, something were to happen to the developer, right? It still should not impact the tenants and the income flowing through. The manager is there, the trustees are independent, and that model should continue. So in a way, it's a fairly, if I'll say, protected way of investing and getting the benefits of investment in real estate. Do not expect the kind of development profits that one would expect if you're going into a development, stage. This is post-development, post-completion, steady yield returns, 6-7%. You saw that, plus appreciation that could come in through, increase of rentals in the future.
Right, and I think that's quite interesting. With that, I already have a couple of questions on my side. But before I move to the selected last set of questions, I'm quickly sharing my screen. So all the attendees members can quickly scan this QR code, or they can click the link in the chat window below to mark your attendance for this session. If you are attending all the sessions all throughout the Masterclass series, then the participation certifications will be emailed it out to you by the team. So, but so in the meantime, quickly make sure that you are scanning the QR code to mark your attendance, or else click the link in the chat window below. With that, I would like to take a couple of more questions, Mr. Gautam, while the audience members are just marking their attendance. One of the interesting question I have is by Miss Neha, and she asked that, can overseas citizens of India explore REITs and InvITs as an investment option?
Yes, absolutely, Neha. In fact, if you look at the three listed REITs or even some of the InvITs which are there, this has been a a good source of attracting good long-term foreign capital. In fact, in the infrastructure space, India overall is a country which needs capital, and the REITs and InvITs are a specific product class that global investors look for across when they invest across various countries. Unfortunately, they do not find this product in many countries. And therefore, we should be proud that in India, we are amongst the handful of countries, there'll probably be half a dozen and certainly not more than a dozen countries of the world where you've got a good working model around REITs and InvITs. So definitely, this has been a source of good attraction for foreign capital. And as I said, the institutional capital, not the overnight capital, and which is here for the long term. So it is a mark, I think in one of my slides I put down, it is actually a mark showing the maturity of the capital markets of a country, whether you have a REIT and InvIT and how well is it functioning. So we should be very proud that we are in that piece, and we have this platform to attract foreign capital.
Absolutely, and it's quite interesting that like the overall ecosystem has already been developed since past couple of years. But still we see there are a lot of challenges and the problems that industry might be facing. So I think like that's something as a question that I would like to take up as well, and get your thoughts around that. So this in fact can be more towards in a direction where in terms of the participations can come up with relevant ideas in terms of what challenges and problems the current industry is facing, and like on top of it the ideas they can build up on top of it.
Yeah, I think I'd put some of the key asks from the industry on one of the slides, right? That could be, if you Google up, you'll probably find one of my earlier articles. It was written at the initial time of REITs and InvITs, a little early for its time, but at the time, the banking industry was facing its capital adequacy crisis. And one of the thoughts that had come to my mind is, why not set up a REIT for, exploiting or I won't say exploiting, taking advantage of the fantastic real estate that's held by nationalized banks, getting a nationalized bank, immovable property REITs together, where, one is able to attract, get good capital for a long term, and also be able to solve the capital adequacy piece that was at that time an issue with banks. But like I said, a little too early for a time at that. One needs to have the market maturing a bit before, going down these new ways. But we are 3-4 years into this, and the sky's the limit. Think about what else, where else can this product be used?
Right, absolutely, and it's quite fascinating in terms of the areas that we covered, using like a couple of emerging technologies, the taxation aspect, as well as like new investment opportunities. With that, I think like a couple of audience members were asking in terms of how do you scan the QR code? You can quickly scan it using your phone, using Google Lens itself, or else the second option is on the chat window, you can see the forms link which is there. You can click on that link and mark your attendance. And with that, I would like to thank Mr. Gautam Mehra for joining us today, and I would like to move ahead with the next session.
Thank you so much. And somebody did correct me about the size of the investment in REITs units. I think in the chat I saw it's about 10,000. Somebody mentioned. So yeah, check that out. That's a pretty good number.
Absolutely. I think like it's really fascinating that regulators are actually being more inclusive in terms of getting retail investors participate in alternate asset classes like REITs and InvITs.
Thanks so much for having me here. Goodbye.
Thank you so much, Mr. Gautam, for coming here. And with that, I would like to move ahead with the next session on combating cyber threats. So cyber threats as a domain has always been a fascinating subject. And we have Mr. Krishna Sastry Pindalia, who is the partner at EY. And he's prior to this, Mr. Shastri has worked with Executive Director, Cybersecurity Services, and has been associated with organizations like PwC India, Tata Consulting Services, Ministry of Home Affairs, Government of India, and have handled large number of cyber forensic investigations. His core areas of expertise includes offline and online digital forensic investigations, cybersecurity breaches, compromise assessments and investigation, red teaming exercises, threat hunting, and incident response management, and e-discovery. With that, I would like to welcome Mr. Krishna Sastry and hand over the mic to him and take ahead with the session. Hi, Mr. Krishna.
Hi, just let me share my screen, right?
Yes.
So you're able to see my screen?
Yes, we can see your screen.
Right. Good morning, all. Thank you for SEBI for inviting me to express my views about combating the cyber threats. I hope I'm audible to everyone, right? Is it okay?
Yes, you are audible.
Right. So let us take it exactly what we are going to discuss, as rightly mentioned about today. The cyber threats has become one of the biggest issues at the national level, as well as at the international level, because after that Ukraine-Russia war has really started. So what I try to do in the next 30-35 minutes that has given to me. So first, let me set the context exactly what is happening in the case of cyber attacks. So what are the trends we are observing as a part of this? And what is the modus operandi of the attackers? And can we expect a more number of attacks in the coming future? Let us see it exactly why we are really losing the control over our IT infrastructure, why the attacks are going to increase, and how to combat. We know the purpose of this specific session to generate the ideas so that we expect some products to come out. Because today, every product that is currently available in the Indian market as far as the cyber security is concerned, some vendor out of the country and they're coming and connecting to the national critical information infrastructure. Let it be a banks or let it be, remember, the power grids or let it be our stock exchanges. So what type of products that has to get rolled out? So what type of ideas should get generated? So how we can able to come back at the end? So I'm open for questions, remember, from participants. So please remember, if you want to come out with some idea about what type of things really the market needs or the country needs, it's a must for you to understand exactly what was the attacks that is currently happening on the, remember, the critical information infrastructure. So let me set the context. First point, if you look at is what has happened in the last one day, because this presentation has been prepared at the morning 6 o'clock. Just again, if you go to Google and some other security forums, you can change that word day with a second or the last 1 hour. So you will not believe it. For every 34 seconds, one cyber attack is happening on, remember, let it be a large corporate or let it be a small and a medium enterprises. For every 11 seconds, one cyber attack is currently happening. So let us take it what has happened one day. Let us go at exactly what has happened 1 week, then 1 month slightly, so that you will understand what was the gravity of the particular situations, what the nations are facing. Yesterday, Ukraine has released, remember, something called as a stamp to commemorate the Russian warship that has been impacted because of the Ukraine-Russian war. They released the stamp, and within seconds, remember, the entire postal service has been impacted with the cyber attack. So please understand this is what is important. And again, just you can go to Google and type it today's morning. The entire Costa Rica has been impacted with, remember, a ransomware last week. The hackers have compromised the government computer systems with a ransomware called Conti, C-O-N-T-A. And the systems has been completely become useless, and the hackers have demanded the ransom, but the government has not really paid any money to the hackers. They got frustrated. They leaked the information that has been stolen from the computer systems of the government. Now they are making a bigger attack on them in the form of something called distributed denial of service attacks. So the entire Costa Rica government systems have come to halt as per the reports that is published this morning. And this is exactly what has happened only in the last 1 day. And the second point we are also seeing it is that even the airports are getting impacted with the pro-Russian Iranian groups, etc. So this is what is really happening in the last 1 day as far as the attacks are concerned. What about the Indian context? Just go to Google and read any Economic Times or Business India or any topic, remember, any media paper. The question map is here. They are going to speak about the Oil India debt attack. Yes, on April 10th, the Oil India computer systems has been impacted with a ransomware called Revil. It's a Russian malware. Initially, they did some investigation. They came to know probably the attack has come from Nigerians. And Nigerians are using the Russian malware to completely encrypt the data that is available in the computer systems of the Oil India. And they started asking about approximately 60 crores of rupees in the form of Bitcoins to provide the decryption keys so that the Oil India can decrypt the data and they can make the business continuity as usual. So this is what has happened last week. If you look at it, the Oil India is concerned. What has happened in the last 15 days in the Indian context, again, if you look at this. Yes, the government of India has also confirmed the Chinese hackers are trying to, remember, enter into the power grids at the Ladakh region. Because, yes, we are having, remember, power outages that are happening. The Indian state load dispatch centers, which are part of the power grids, which are available in northern India, are getting scanned by the, remember, the Chinese hackers to understand the network so that they can cause a bigger damage. It has been identified at the right time and we are able to control to a great extent. To a great extent, please remember this point. The power grids are the one that is getting. And again, if you look at it in the last one and a half month itself, just to go back slightly, the Jawaharlal Nehru Port Trust, which is having the container terminal, has been completely impacted with the ransomware. And that is out of action for approximately 15 days. So transactions, the loading, offloading and unloading, everything has been, remember, stopped just because of, remember, the cyber attack that has happened. And many organizations are not really coming forward to report also really they got impacted the ransomware because the reputational damage or some other value you can think of. But hackers are not silent enough. They are the one who are coming to media and coming and giving that these are the organizations which are getting impacted this set of particular ransomware. Let us look at this sheet. On dark web, there is several places where what the hackers are trying to do is any company which got impacted with the ransomware with their variant, they're just updating it. Remember, it's almost like a stock exchange type. We will show it later what for I'm mentioning about this. So they are going to remember, say, particular organization has impact with a particular variant of a ransomware. The reason why they are maintaining this list later, I'm going to explain you. Because it's a completely business driven today, the ransomware attacks is completely partnership model and stock exchanges also, remember, in some countries have listed some of these ransomware groups companies. So in the last 2020, if you look at it, a large number of companies are getting impacted the various variants of the ransomware here. Again, let us look at what has happened in the case of, remember, the Ukrainian-US war also, if you look at it. The war got slightly delayed by 4 or 5 days. You might have read it in the newspaper. Initially, remember, Russia wants to start sometime on the February 18th or sometime, but it went to February 24th or sometime. The reason why it got delayed, because the Belarus, remember, which is supporting the Russia in this particular war, which is, remember, helping the Russia to move their vehicles in their, remember, the railway transport. It got impacted with a cyber attack. And the Belarus railway system has been completely down for a few days. The movement of the, remember, the trains has come to a halt. So automatically it is also delayed, remember, the Ukraine-Russia war. So once this war has started, the world has been divided into two groups as far as the hackers are concerned. Till that time, we don't know which is a Russian supported, remember, hackers or which is the other part of the world supported hackers. Now the whole world hacker group has been divided into two categories. Ukrainian support hackers and the Russia support hackers it is. So one is, remember, supporting the other in the war. It means the traditional war is getting a complete support from the hacking groups, etc., to make their communication system to completely down. But is it really happened in the last 15-20 days, or is it a groundwork of really last 3-4 years? We can see it in the next few slides. So now remember, the Russian hackers or the pro-Russian hackers are hacking the computer system of Ukrainian as well as the supporters. And the vice versa is currently happening here. That's where almost for the last 3-4 days, if you look at it, a large number of cyber attacks are currently targeted to the critical information infrastructure. Especially remember something called the airports, the internet service providers, telecom service providers, and the SCADA systems or the automation systems. That's where the real cyber attacks are happening for the almost last 1 week. So till remember December 2021, we have seen most of the attacks that was targeted against the banking and financial sectors. But today, most of the attacks are getting moved from the banking and financial sectors to the critical information infrastructures related to what I spoke earlier. It means the trend of the attackers are also getting changed. They are moving from the IT system to OT systems is a new trend we are observing it. They are not just hitting something called as the ATM switches of a bank or the SIP systems of a bank. Now they are targeting something called the SCADA systems of the computer system to cause a bigger damage. Now these hacking groups have become very, very state support. Yes, there is a pro-Iranian government support. We have seen it, remember, North Korean support hackers are already existing in the market. So that's where today the most of the attacks are really happening. Targeting to industrial and operation tech targets is a new trend we are observing it. So one of the major attacks that is happening as a part of this is something called as a ransomware attacks. Being in this industry for more than 27 years, I have seen the ransomware attacks starting from 1990s onwards itself. Ransomware is nothing new, to be frank. But at that time, ransomware is only to cause damage and for the purpose of happiness of the hacker, not more than that. I receive a mail just by clicking, my computer system will get completely encrypted. Beyond that, nothing the hacker will expect. But today, ransomware, I would like to call something called the revenue generation malware. So it has become a revenue generation for not only individuals, but also the groups, but also to the nations is a new trend we are observing it. So ransomware has become a service. Ransomware has become a partnership model. And ransomware companies are also listed in some of the stock exchanges. And venture capitalists is also coming and giving, remember, what is the amount of money really you can invest on a particular ransomware company. So that is where whatever earlier I shown in the dark web, there are hundreds of companies are posting, I infected so-and-so client with particular variant of the ransomware. So if I'm having some $200 with me, where to invest? I don't require to look at, remember, the stock market to where to look at is. Go to the dark web. Look at which ransomware group is becoming very prominent. Convert our $200 into the form of something called as Bitcoin or the cryptocurrency which they're accepting it. So certainly by tomorrow, money will get automatically doubled. So please remember the ransomware has become a service and ransomware has become a partnership. In the dark web, certain companies are also started giving the badges. There's a platinum company, there's a gold company, there's a silver company. So more the remember companies got impacted with a particular variant of a ransomware, they are going to get the badge called as a platinum. So it is advisable to keep the money there so that you will get the returns. So 1 Bitcoin probably will become 2 Bitcoins by the end of the day. So ransomware has become a service and it has become a partnership model now. It has become a foreign exchange earner also for some of the rogue nations. We have seen it because of bad practices followed by these nations. There are certain nations in the world which are experiencing the sanctions. So their foreign exchange reserves have come down drastically. That countries are encouraging their countrymen to hack into the other country's computer system and encrypt them with a ransomware and get the bitcoins, sell the bitcoins and get the dollars, and so the foreign exchange reserves will increase. One rogue nation foreign exchange, 8% is coming just because of something called the ransomware attacks. You know very well about that country which is experiencing sanctions from different Western parts for quite a long time. And today they are also able to manipulate the world markets. Today, everyone is asking about, remember, the ransomware money should be paid in the form of a bitcoins. So Bitcoin price is increasing to a great extent. But tomorrow, if all of them has changed, okay, let us don't go for the bitcoins, let us go for Ethereum. So the demand for Ethereum is going to increase. So automatically, remember, the currency in which they are going to ask also, remember, going to change means the world markets are also going to change it. So recently, you have seen it. Why there is a lot of variations coming in the form of a bitcoins. Now in most of the cyber attacks, The hackers are not asking the money in the form of a Bitcoin, so they're asking in the form of Ethereum, etc. So please understand today to what base they are having it, they can able to manipulate the world market on the basis of the cyber attacks is a new trend we are observing it. Starting from colonial pipeline, perhaps you are aware about this is the first place after the 2001 Twin Towers attack. A regional emergency has been declared in 11 states in the United States just because of cyber attack. I never thought in my life due to cyber attack, the food prices will increase and meat prices is going to change. So due to ransomware attacks in the JBS, the largest meat supplier in the United States, their computer systems got completely encrypted. So their logistic support has come to a halt. So the demand in the market for meat has increased because the supply has come down drastically due to transportation issues. And ultimately the meat prices started increasing to a great extent. Now, once this ransomware attacks has happened, what we found it in the last one and a half year is attackers will come into the organization and attackers will take first the data, then they are going to encrypt the computer system with, remember, the ransomware. So earlier ransomware attackers, what they used to do it, just encrypt the data, ask the money in the form of a Bitcoin. But today what they are doing it is, before they encrypt the computer systems, the hackers are going to first to take out the data that's called data exfiltration. Then after the data exfiltration, they are going to put a ransomware in the computer systems. Then the ransom note says, please pay me, remember, this many Bitcoins by in the next 1 week. If you don't pay the money, we are going to release our entire data in the dark web for a sale. And once the data has been sold in the dark web, the privacy's regulatory requirements will come into picture. So due to that, the companies are supposed to pay the penalty of 30 million, 40 million, 50 million. So hackers may be asking for 10 million. Then what the companies are doing, instead of paying 50 million as a regulatory fines and legal disputes, let me pay 10 million to the hackers to get back the data, what the hackers are getting benefited in this process. But what we are finding it very recently, hackers also knows very about in which country data is important. I've seen it once, remember, Europe has got a GDPR. The number of cyber attacks that has happened where the data breaches has happened to a great extent because privacy has become a very important issue in the European market. But I've seen the Indian market where when hackers compromise the computer systems, they are not much bothered about the data. The reason is they know very well about India don't have anything called data privacy. And they know very well about Indian, remember, citizens, the data is publicly available at several places in the country. That's why hackers are not really taking, remember, customer-based data from the Indian computer systems. But hackers know very well about Indian computer systems are generating the IP, intellectual property of the source code. Today, if you look at it, hackers, once they enter the, remember, computer system of a company, IT company, they are not much bothered about the data of the citizens or the data of the employees. They are now taking about the source code which has been developed by that company. So look at, remember, Lapsus Dollar event. This is a popular group that has really has impacted for the almost last 2.5 months. If you look at it, the NVIDIA corporation source code has been leaked due to this attack. Samsung source code has been leaked, and Microsoft has also lost a good amount of source code because of this breach. Why the hackers are really interested in the source code? Because using that source code, now they want to make a bigger attack on the computer systems. That is where the supply chain attacks are going to play an important role. In future, most of the cyber attacks are going to be like a supply chain. Assume a scenario today, 90% of the world computer systems are using Microsoft. If Microsoft source code is available with the hackers, and if they can, remember, compromise that and they can launch a bigger attack, that is also possible. That's where try to recall the SolarWinds attack that has happened, the Log4j vulnerability that has happened, if you look at it, and how much impact that has created in the whole world. So supply chain risk is the one biggest problem we are going to face in the next 4 to 5 months. Let us look at in the SolarWinds itself. The SolarWinds, remember, is having a software, IT management software called Orion. And you can look at their customer base, how much it is. 18,000 customers got impacted because of this attack. Out of the Fortune 500 US companies, 425 are having the same software. Now, what has happened? Instead of hackers attacking all the people who are using that particular software, they compromise the computer systems of the SolarWinds and they pushed something as an update. So all the customers of the SolarWinds who are using this particular software got, remember, impacted. And these computer systems started getting connected to the command and control server. So how you are supposed to visualize? Assume you got a 3 banks ABC, which are using the core banking solution provided by some company X. Earlier, hackers used to compromise A, B, and C separately. Now they realize, let me compromise this core banking solution provider company called as X. Through them launch an attack so that the ABC will get impacted. Today, the supply chain attacks are becoming one of the biggest problems we are facing. So ransomware attacks, remember the supply chain attacks, the source code thefts are, other than that, the other things that are happening in the Indian market is something called data breaches. But hackers, what they are doing is they're getting this data, and that data they know if they ask the original company, they are not paying. They are giving to the local market, remember, it may be a Jharkhand group or it may be Bharatpur group or some groups. And hackers are using that telephone number, that mail ID of, remember, customers. And based on that, they are doing it pretty frauds of, remember, something OTP stealing, transferring the money from your bank account like a Paytm fraud, OLX fraud, etc. They are doing it. So please remember today, the dominance breach, that is really what has happened is how much amount of customer data has gone it. So matrimony websites are getting, remember, breached. If you look at is Unacademy, if you look at Big Basket, you take it, remember, a large number of companies which are getting operated from the Indian market has experienced the cyber breach where the customer data has been stolen by the hackers. But the original companies have not paid any money to the hackers, so they started selling in the local market. So local, remember, criminals are using that for doing a pretty fraud of transferring some money from your account to somebody's account, etc. So let us see what the trends we are observing as far as attacks are concerned. Yes, what the trends we are observing is the attacks have become highly targeted in nature today, specific to an industry. Gone are the days where 1990, if a virus comes, it used to infect my computer system, Baba Atomic Research Center computer system, and State Bank of India computer system. But 2000 onwards, if a virus comes, it was specifically crafted to the bank, means it won't impact my computer system or Baba Atomic Research Center computer system. Because specifically that program has been written so that it will impact the banking industry. Then what happened in 2010 onwards, we are observing it. And that too specific to an industry, to a particular variety also we are observing it. Let us take the case of very popular cyber attack has happened in the Indian banking system called Cosmos Bank. Please remember, in the case of Cosmos Bank also, if you look at it, the malware that got dropped in the Cosmos Bank ATM switch, if you drop it in the State Bank of India, it won't work at all because it was specifically targeted only for a particular bank. So that much pinpoint accuracy today hackers are having. So the attacks have become highly focused in nature today, targeted a particular model and make of ATM switch to SCADA system to the IoT systems. That is what is the trend we are observing it. The second is there is a very big increase in the attack surface area. Due to digitization, remember, due to fintech industry booming and all, remember, organization somewhere or other linked to some other organizations. So you may be taking enough security, but that hole is not getting closed. So compromising of your vendors through your vendors attacking the original person is one of the biggest trend we are observing it. So organizations have become robust in nature. Digitization has happened to a great extent, and fintech industry is moving to a great extent. That's where there's an increase in attack surface area has become. And a lot of hackers know a lot of vulnerabilities, but they're not releasing that vulnerabilities. They're just waiting when the opportunities will come. So we know something called zero-day vulnerability. A vulnerability which only hacker knows, but the original application vendor or the person working on the application could not identify it. The zero-day vulnerabilities are the one which are really causing the big problem. And cybercrime has become a very good mature industry today. If you look at it, it's a very supply chain management has been well established. Look at the SWIFT attacks that has happened in the banking industries. Look at the Bangladesh attack and any other attacks. Almost in all SWIFT attacks that has happened, the final beneficiary is going to be at the casinos of Philippines or Macau, or he may be a part of the drug cartel of Southern America, or he may be an arms dealer of somewhere Middle East. But do you think the drug cartel involved in the hack? No. Drug cartel will hire an hacker. Hacker will hack the bank and transfer the money. For every 100 crores, he is going to charge some 10 crores or rupees. So a perfect supply chain management has been established in all the cyber attacks we are observing it. And third, it is very difficult to identify who has initiated the attack because these attacks have become something called modular attacks. So initial activity is done by some man, further activity is done by another person, and the final beneficiary is going to be person as a third person. And in the virtual world, interlinking of these three are very, very tough. That's what we are observing it. So all these attacks have become very modular in nature, and they're getting very good support from the dark web or the virtual private networks or the Tor browsers or the proxies, and coupled with transferring the money by using the cryptocurrencies. They're selling the malwares, they're purchasing the malwares, transferring the malwares by using something called as, remember, the cryptocurrencies. And today, who is really present behind these attacks is the state supporting agencies. And we try to interlink them one with the other, but we are facing it's very difficult because the groups are constantly changing their activities. And what the other attack pattern is? Earlier, they used to exploit the vulnerability in a software. Now they're exploiting the vulnerabilities available in the hardwares. And please remember, almost every one of you are using 98% of the softwares we are using in our organization has brought from the third parties. If third party got impacted, you're also going to get impacted. The third party, our Indian tendering process is mostly on the basis of the L1 tendering lowest one. We never give any importance for really what was the content of that particular software, whether is it possible to exploit or not. So what the small firms are doing is, they are just going to GitHub and downloading certain source codes. And that source code they're making is a part of the application they're selling it to you. We don't know exactly what it is doing behind it. None of us are aware. That's where the supply chain attacks is a new trend. You can seeing it almost every alternative day to day. And these attacks have become highly advanced persistent threat attacks. They are highly focused, targeted. Till they reach the objective 6 to 8 months, continuously they are going to work on that. And the malwares, etc., they are developing is also could not be identified by the existing antiviruses or could not be even be detected by the existing endpoint detection response tools. The IP addresses, the URLs, the malicious files they are dropping in has never been even identified by the so far threat intelligence groups. Please understand, many of you are using some of the antivirus products or something called advanced products, etc., which they said that we provide you what you can say threat intelligence. But based on my experience of investigating more than 1400 plus cases in my lifetime, so far the IP address or the URLs from where the attack has come or the malicious file that has been used by the hacker, it has never been reported by any of the so-called threat intelligence groups because hackers are also very, very intelligent. They are using artificial intelligence and machine learning techniques so that your antivirus could not detect that particular virus is dropping the computer system. Coupled with your applications vulnerabilities, the operating system vulnerabilities are really causing the bigger problem. Especially remember the Microsoft having certain utilities internally which the hackers are using it to exploit the systems and all. This is some of the stats I want to look at to understand the gravity of the situation. For every 11 minutes, one ransomware attack is happening. You can think of ransomware has become a booming industry as far as the cyber attacks are concerned. And 87% of the attacks is happening just because of phishing mail. One of the employee will receive a mail, he is going to click it, that's all, the whole organization is going to get compromised. 8 lakhs of malwares are coming per day. I'm sorry, here it is mentioned as a minute, it is a per day. Approximately 8 lakhs plus malwares are coming. And average time the attacker is present in any organization is 185 days. Even though Oil India cyber attack has happened on April 10th, the attackers were present in the network from the November itself. For 4 to 5 months, remember, even the attacker was present in the network. Why the existing security operations center could not identify it? Why the existing threat intelligence could not identify what is happening in the network? Think about it. That's where our ideas should get generated to develop a very good product. And the global cost of cybercrime is something around 6 million. So 6 trillion, that's what we are expecting by 2024. But I'm pretty sure about it, we are going to reach by the mid of this 2023 itself. Please understand that. And what was the modus operandi? Basically, they do one thing. There are two ways in which the attackers will try to come inside. One is, if any internet facing machine is there exploiting that vulnerability and using that vulnerability, attackers will come inside and cause the damage. They put a ransomware, they will take out the data from the computer system or not. So one variety of way the attackers will come into the network is on any internet facing machine where you are regularly conducting VA and PT to identify the vulnerability. That vulnerabilities is maybe known to you, but there are certain vulnerabilities which only hackers knows, that is called zero-day vulnerabilities. Using that zero-day vulnerabilities, they're exploiting and entering to the network is a one trend. So what is the second way the hackers can able to do it? Just sending a phishing mail. One of the employees are going to click. One employee is sufficient. Let us look at from starting the Cosmos Bank breach to the Colonial Pipeline. Attackers are going to send a phishing mail. One of the employees is going to click it. That's all. What will happen? That machine will get connected to the command and control center, and hackers from there will try to launch a bigger attacks, etc. So there are only two ways the attacker can enter into our organization's network. One is nothing but exploiting the vulnerability of any internet facing machine. The second is nothing but sending a phishing mail compromising one endpoint machine of the employee. Please remember this point. One endpoint machine is sufficient enough for me. Today, 87% of the cyber attacks are happening phishing mail. Hacker will never come to your database server directly. He compromises marketing fellow or HR person's computer system. Through that computer system, laterally he will move into the whole network and finally reach the target. And he put a ransomware or exfiltrate the data to the command and control server called C2C server. So this is what the modus operandi. I'm pretty sure what we can expect in the future. Yes, we are losing control over our IT infrastructure. We are using a large number of third-party products. We are going for the clouds without understanding what is the real impact of the cloud. So cloud, we got a feeling it is a much cheaper, etc. But it is almost keeping the money of, remember, or the gold ornaments in some bank locker. If the bank is not taking a proper security, you are at a great risk. Now, can I keep my ornaments in my home? Or can I keep my ornaments in a bank locker is one question mark where you have to think of. The second you keep it in the bank locker, you don't have any control over that, please understand, except time to time going and accessing the data or time to time going and taking the ornaments, not beyond that. And attacks are getting more sophisticated today. If you take the skill versus focus, less skill and less focus are called script kiddies. Now more skill, more focus are coming called as APT attacks. So attackers are spending R&D and spending money and they're developing their own toolkits, etc. They got their own frameworks to enter into the organization. They got their own exploit toolkits. And they're having their own weaponry. So it is very difficult to see who is a real attacker present. Sometimes if we say Russian hacker is present, we don't know is it a Russian hacker or it may be our neighboring Bangladesh hacker, because the tactics and tools and procedures, almost everybody is using the same. And there's an exchange of malwares are happening at a very faster rate. You can never identify who's a real hacker. And we're all started something called work from home, starting from first wave to second wave to third wave to fourth wave, which are going to experience. So organizations have become perimeterless today. There is no boundary that is separating your home with respect to our organization is a new trend we are observing. That's where the trend that we are seeing here it is. Almost if you look at the top threat scenarios, the data breaches coupled with the ransomware is a big problem, targeted to the critical information infrastructure. Phishing is the one, remember, the attack vector that is going to cause a bigger damage for us. And who is present is the organized crimes. Criminal gangs which are having a support to the nation state, but which is very difficult to prove it at the end of the day. I can theoretically say that practically is the government is supporting them or not is very difficult to say. This is a threat scenario you are seeing it. Then how to come back for this? First is our strategy should be based on the incidents we are seeing it. As now organizations have to realize one point, 100% cybersecurity is a myth, it can never be reality. There's a one point people have to be very careful about it. Second, eradication of the cyber attacks is not possible, only mitigation. And change your mindset from reactive to proactive to predictive. So you have to predict before the attack is going to happen. Then earlier our cybersecurity strategies protect the computer system. If something happens, detect it, then go for respond. This is not going to work at all. How fast you can detect, how fast you can respond, how fast you can protect is the most important. Yesterday I have seen in 32 seconds, 435 servers got encrypted because of a ransomware. Hackers went into the Active Directory. From the Active Directory, they pushed a remember group policy. So that's where the real problem has come into existence. So detect, respond, protect should be the new cybersecurity strategy. That's where any product that is going to come is going to work in the direction instead of thinking about protection. How fast you can detect, how fast you can respond, how fast you can able to protect your computer system. So the idea that should come to you is, do you have any set of products which can able to do this faster detection? That's where we see today's mantra is rapid detection and early response. Please understand it. That is the need of the hour we should have it. So what the organizations are looking is 4 set of things. In case if I got breached, what I should do it. That's where our capabilities, our ideas should know how to develop a forensic, remember, especially cyber forensics. In case of cyber attack happens, how fast you can identify what was the root cause of that particular security incident, what is the malicious file that has been dropped by the hacker, to what extent the damage has happened in the network. That is where you have to do a forensic investigation. Today, April 10th, Oil India got impacted. Today's date, you know very well about it. As on date, exactly they have no clue from where the attack has come, what is the extent of the damage, etc. Even after 14 days, please understand this point. That's where the most important idea should, how can you develop the capability of this forensics, remember. Second, am I breached? This is a lot of questions organizations are going to ask you. So the question mark is, you said average time the attacker is present in the 185 days. Can already some attacker was in my network? How can I know it? Is there any way to identify that already I have been compromised is the one question mark. That's where what organizations are looking at. Something called compromise assessment, something called threat hunting in the network. Hunt my network and see whether any attacker was there in the network. If already there, to what extent of damage is already caused, where he is trying to move it, what areas he is trying to enter, that's one. Third, is my systems are resilient for the attack? Whatever security I really spend it, am I getting the return on investment? Is it really I'm prone for the attack? So that's where you have to do something called red team exercises, blue team exercises, purple team exercises, etc. Then how to build up that capabilities in the whole organization in terms of the people process. That's where the organizations are looking at. So anybody try to come out with some product, your idea should rotate around these 4 areas really to secure or to combat the cyber threats. And this is what to develop for you. Generate the ideas. The most important is we want to encourage the startups to come up and give the product. And there is a very good public-private participation is required. And third is starting something called incubation centers at the university level. Funded by, remember, the regulators, funded by the universities, funded by the government of India. A large industry-university collaboration is needed. What is most important is, once my surface has become very large, every bank has become robust, internet banking, mobile banking, fintech banking, everything has come. My attack surface has increased. So can I scan how many machines of my network was present? What was my assets? What asset is having what vulnerability? Recall, once the Log4j vulnerability has come, nobody has an idea how many systems in the organizations are using Apache on the background so that this vulnerability can be closed. And attack surface management is the most important one. Conducting cyber drills, red team, blue team, purple teams, etc. is important. And threat hunting and compromise assessment, how to build that platforms. And secure by design, how to standardize a particular product the organizations are using it. How to test a hardware and a software to identify what vulnerabilities are available. At the end, building a very robust cyber fusion center. Building the whole organization's logs and creating a big data lake and looking at by using artificial intelligence and machine learning analytics capability, predicting whether already any attack is happening in the network or any attacker was present in the network is most important. So please remember, one area where the ideas is we are really looking for it is organizations are going for a beautiful framework which is developed by Mr. Daniel Measure in 2019, popularly called Build, Attack, Depend, called BAD Pyramid or BAD Framework. That's where
Hi,
we
Mr.
try
Krishna.
to. Yes, sir. This is the last slide I would like to show it. Okay. So, and this is where, remember what you are looking. The IT security companies are looking, trust itself is a vulnerability, and try to see we are all moving from traditional architecture to that of something called zero trust architecture. So thank you very much. If you are having any Q&A, I'm more than happy to answer.
Great. Thank you so much, Mr. Krishna. That was like a really interesting sessions, and especially in today's like digital native world, a couple of important aspects around phishing attacks, around cyber threats are pretty much prevalent across domains, irrespective of whatever walks of life one is facing. And like with so much connected financial world, financial securities is of utmost importance. With that, I would like to like take a couple of questions from the audience members that I have. But before that, let me quickly share my screen so that audience members can quickly mark their attendance, like the ones which they did for the first session. Similarly, the audience members can either scan their QR code and or else click the link below in the chat window and mark their attendance. With that, I would actually take a couple of questions. I have an interesting question from Miss Sangeeta, and she says that even if we pay the funds for the ransomware or the exfoliators, we don't really know that if they have made a copy of the data that they had secured. So how do we get security around that?
100%, Sangeeta, I fully agree for that. One is called double extortion technique. They are using it nowadays. One is they provide you decryption keys. They said the data has been given to you, but at the end of the day, they're going to sell it at different location because basically they never follow any ethics or anything, etc. So there is no guarantee that the entire data has been deleted from them. Somewhere or other, the remnants will be there. Some other group members will regroup to another group, and again, they're going to show this data at some other location. We can never say that they really removed the entire data from. That's 100% guarantee. Yes, this problem is still a problem.
Right, that's interesting. I'll quickly answer Siddharth's question, who says that do we need to scan for each session? The answer is yes, you need to scan for each session. And with that, since we are talking about like scanning the QR code, I would like to take an interesting question from Sujit. Can a attack happen by scanning the QR code? Which is actually quite an interesting question. Any specific use cases or any threats
Yes,
you have seen in terms of phishing attacks or anything that has happened in the past?
100% is already happening. So where the fake apps are coming in, people are downloading it, the QR codes are siphoning the money from your accounts, etc. And sometimes the malicious codes, the second you scan it, automatically it get connected to the command and controls of the hacker, and it is going to drop a malware in your network. From that onwards, the next attack is going to happen the chain. So nowadays the QR codes are really creating a big problem. It's very difficult to identify the source, the genuineness of the particular QR code. That is happening already. Okay.
Yeah, absolutely. That's quite interesting, and especially even we have seen when it comes to digital payment native worlds as well. There is a lot of sort of a attack which happens where like someone just replaces the QR code or just like redirects the overall like mechanism. But yes, with that, I would like to take an interesting question ahead to with respect to the time. I have a question from Vijay Rangam. And he asked that what are the opportunities for a startup that are thrown by these attacks, attack events?
So the startup means I could not get this. Is it startup for a security company to start? Because yes. I will tell you, for me, startup means not only security companies, but hackers also starting their own companies, right? In a lighter sense, I'm talking about it. So there's a very good potential market is available today. There's a lot of companies are really coming up. And we made a very good impact thanks to Data Security Council of India, NASCOM, which is really conducting every year something called, the annual event where a lot of startups are getting encouraged for them. In fact, they're awarding the people also for the best startup and all that. So if you can contact DSCA and NASCOM, and they are the one who are taking very good role, remember, and the lead role, I can say, to encourage the people to work in the startup of all this, and a very good potential market is available. And I think you can Google my name, you can get it, you contact me. I'm more than happy to help you also how to connect the right concerned persons in DSA and NASCOM.
Yes, and absolutely, it's quite amazing. With that, I would like to take one last question for this specific session. And the question is from Mr. Ganguly. And he asks that most cyber attacks are, are intrusions and are caused by human errors, such as social engineering. About 93% of them also are strengthening the industrial security, will have no major effect on these events. Any thoughts from your side on this?
Yeah, as you rightly mentioned, it's a human error means people without understanding the clicking the phishing mail, right? So the automatically, it's not a human error. Even we educate them, don't click on the phishing mail, etc. Is clicking means you can call it a lack of awareness or the remember the hacker's mindset who can able to fool us so that we are going to click on that. There's no doubt about it. Second point is yes, today most of the attacks are not really targeted to the SCADA systems, etc. They're targeted for the normal systems. But things are moving very fast. Remember, so far that area has not been exploited by the hackers because hacking a SCADA system means I have to do some R&D, I have to do, some people have to invest the money. That type of job is done only by the nations, to be frank. So SCADA systems attacks will never originate from individuals. Wherever a SCADA attack has happened, you take it granted the person behind that the group must have some support from the nation. Without that, it is not really possible. Look at the Stuxnet attack that has happened, the Iran nuclear program, where without the government involvement, such type of attacks will never happen. Yes, SCADA attacks are less in number compared to tradition, but it is going to increase after this Russian-Ukraine war. It is already increasing and we are already getting experience.
Yeah, absolutely. I think, and with respect to like human errors playing an important part, I think like the more education as well, like since it has already been happening across organization, but it's more about like using the right logic in terms of like if the email ID looks suspicious, make sure that you don't click on the links immediately. Try to Google out the email ID first, or just be a bit more logical in terms of like clicking any suspicious links. With that, I would like to end this session, and I would like to thank Mr. Krishna for joining us and giving us a detailed overview in terms of the overall cybersecurity landscape and combating cyber threats. And with that, I would like to like start with the next set of session, that is the like Fireside Chat, which is on building regulatory capacity in the ecosystem and ease of onboarding by making simplified KYC. And we have some amazing panelists. I would like to hand over the mic to our moderator, Ms. Richa Goyal. Ms. Richa is the General Manager at SEBI. She heads the Division of Market Intermediaries, Regulation and Supervision Department, looking after the policy formulations and supervision of debt market intermediaries, credit rating agencies, and debenture trustees. And she has over 18 years of experience working with SEBI. With that, I would like to hand over the mic to Ms. Richa.
A very good afternoon to all of you. Welcome to this session on building regulatory capacity in the ecosystem and easing of onboarding by making simplified KYC. I welcome my panelists, two very eminent and distinguished gentlemen who also have been my bosses in the past in SEBI. And let me just start by giving a quick introduction. First panelist is Dr. M.S. Sahoo. He doesn't need any introduction, but for the benefit of the audience, let me just start by giving his huge CV a brief introduction. Dr. Sahoo is presently serving as a distinguished professor at National Law University in Delhi, where he has been focusing on building regulatory capacity in the ecosystem. He needs obviously no introduction, as he was the founder chairperson of Insolvency and Bankruptcy Board of India, where he spearheaded insolvency reforms in the country. He has, other than being a chairperson of Insolvency and Bankruptcy Board of India, he was also a member of Competition Commission, Secretary of Institute of Company Secretary, a whole-time member of SEBI, and that was his second term at SEBI. He was also previously a chief general manager at SEBI. and he was an economic advisor with National Stock Exchange. He worked in these institutes at various leadership positions, and he has influenced majorly regulatory designs, not only with regard to bankruptcy laws, but also regulatory architecture and practices in the country in all the spheres, and especially in the securities market. He was instrumental in contributing to securities market reforms, including dematerialization of securities much ahead of matured market. He has been a chairman and member of several committees set up by the government and regulators. These include chairman of committees related to depository receipts, domestic and overseas capital market, external commercial borrowing, chairman of the Committee of Experts on Institutional Framework for Valuation Professional, member of Competition Law Committee, and member of Insolvency Law Committee. All these have majorly influenced economic reforms and regulatory architecture. He conceptualized and designed several publications, including research initiatives by stock exchanges, the fact books, SEBI bulletin, the news insolvency board bulletin, and edited professional journals, including Chartered Secretary. He has written a lot of articles. In fact, I personally follow his articles in Business Standards and Financial Express to get a very good perspective. He has also promoted extensive use of technology in education and examination, starting with NSE certification in financial market, the first online examination of the country in 2000s. And also in Company Secretaries Court, limited insolvency examination, valuation examination, etc. He has built bridges for two-way transmission of learning between industry and profession, and added to the body of knowledge relating to regulation of financial market. Thank you so much, sir, for joining us here. We welcome you to this panel discussion. My second panelist is as eminent as the first one. He is Mr. J.N. Gupta. He also served 2 terms in SEBI. He's the founding and managing director of Stakeholder Empowerment Service, which is a non-profit corporate governance research and advisory firm. He has over 43 years of diversified professional experience in public and private sector, including 2 terms at SEBI. He was a division chief of primary and secondary market as way back in 94 to 96. He rejoined SEBI in 2009 as an executive director for a 2-year term, wherein he was in charge of market regulation, surveillance, and derivative and new products department. He was a member secretary of the committee headed by Dr. Bimal Jalan, former governor of Reserve Bank of India, to review market infrastructure institution. He was also a SEBI nominee on ISCO standing committee and member of steering committee on with regard to clearing corporations, role surveillance, etc., of a committee of an ISCO committee. He's a BTech in electrical engineering from IIT Kanpur. And he is also currently serving as a member of Primary Market Advisory Committee of SEBI, and also a former member of Secretarial Board of ICSI, chairman of Task Force of Audit, Due Diligence, Compliance, and SEBI Laws, constituted by ICSI, a member of Corporate Governance Committee, Quota Committee, constituted by SEBI and MCA. And he works pro bono at SES since inception. Thank you, sir, so much for joining us. We welcome you to this panel discussion. So let me start by giving a generic background to the panel discussion. So building regulatory capacity on an ecosystem, regulatory capacity is not only about regulators' capacity, but also regulated entities' capacity. So the idea for Manthan is an ideation. That is SEBI's belief that every single idea is worth evaluating, and participants will be encouraged to bring out any idea, even though which may not be achievable immediately. So I will first start by directing my question to Dr. M.S. Sahoo, who will give me some, because he's worked with a number of regulators. He's had lot of illustrious career, like I've already highlighted, with the Ministry of Finance, with National Stock Exchange, SEBI, then returning to SEBI, then with CS Institute, and finally with IBBI. So, in his recent article, he highlighted that there is a need to build regulatory capacity, wherein he has articulated very aptly that with right human resources, both regulators and firm would appreciate each other's perspective, and which ultimately leads to minimizing cost of regulation. Sir, given that you have worked at these appropriate places, I just wanted to ask you, what has been your observations on working with institutes, including ours and IBBI and other places, with regard to regulatory capacity at these institutes? And what actually is the way in which optimization and reduction of cost of compliance can be achieved?
Thank you, Richa, and thanks to SEBI for giving me this opportunity. You just mentioned about IBBI, where I was directed to implement the reforms in 60 days time. We did not have any idea of the reform, no capacity. Everything was to be created afresh, brand new professions, institutions like IBBI, Adjudicating Authority, insolvency professional agencies, information utilities, regulations were to be written, capacity to be developed, but we didn't have the luxury of time. We just implemented the reforms and learned by doing it. We have essentially followed the same learning by doing approach for the last 3 decades in the space of regulation. This approach, of course, takes a little longer, but even today, unfortunately, we do not have, no conscious effort to develop regulatory professionals or build the regulatory capacity in the ecosystem. Consequently, the ecosystem today hires graduates of law, economics, accountancy, and management, and tries to mold them to serve the regulated market economy. But simultaneously, the market is becoming more and more complicated. We call that we are trying to address polycentric issues in business. And these issues involve many interested parties interacting with one another in a fluid situation. So with increasing sophistication, globalization of markets, the task of making the regulations, enforcing, implementing is becoming more complex and nuanced. But we must also recognize that regulators operate under several constraints. Many of these are beyond their control, like the special statutes we have governing business entities, like you are aware of the LIC IPO coming up. But despite this, I am still sanguine that the quality of regulations is better than that of any service rendered by any establishment in government, public sector, or even the private sector. Nevertheless, there is an acute need of improving our capability in terms of governance, process of what we do, and the content of what we do. See, there are certain activities which are unique to regulators, and we need to focus on building capacity for those activities, like making regulations. A regulator is supposed to prescribe norms through regulations. And as a governance measure, regulators must move away from using circulars, master circulars, guidelines, directions to specify legal mandate. Another governance measure, all of you may not have thought of this, SEBI is a 30-year-old now. The law, neither law nor practice makes a distinction between the SEBI Security and Exchange Board as a governing board and the Security and Exchange Board of India as an organization. And we do not yet have the segregation of responsibilities or role of SEBI as an institution and SEBI as a governing board. Why I am telling you that the regulation making is a specific job of the governing board, only including the comma stop as much as the legislations are made by the parliament. It's not the legislative department or legal affairs department, government of India does the law. Similarly, for making the regulations or any other activity, we need a robust process for making regulations. We consult stakeholders, but consultation is effective only when stakeholders are presented an assessment of likely impact of proposed regulation, the associated costs of compliance and enforcement, and whether it would achieve the desired objectives. And the most typical methodology for such an assessment is regulatory impact assessment. Its importance has been growing over the years. Many mature markets have institutionalized it. In India, over time, a few expert bodies have recommended it, starting from the earlier Niti Aayog, Financial Sector Legislative Defense Commission, and several committees of corporate affairs, economic affairs. But it has not taken up in India, perhaps for three reasons. One is in non-availability of data, limited capacity of regulators to undertake regulatory impact assessment, and hesitance to accountability. And I don't think these are insurmountable. The process has to begin. We need RIA to avoid there is some kind of accusation at times that is unbridled growth of volume of regulations. This has led business to believe that while reforms on the one side is expanding the frontiers of freedom for business, regulations are becoming excessive by imposing undue restrictions of freedom have started undoing the reforms. And you may be familiar with the recent work of the British Parliament, which is finding that we need to restore the balance of the power that have been given to regulators vis-a-vis this. You also mentioned about the technology. We must use technology to facilitate compliance. Stakeholders, for example, want to know who is in control of the company. That is the basis that helps them to decide their stance towards the company. And therefore, SEBI imposes obligations on shareholders, companies, under takeover regulations, insider trading regulations, listing disclosure regulations, to make disclosures relating to shareholding pattern, holdings, changes in holdings, some on quarterly basis, annual basis, some on crossing a threshold. And to facilitate such disclosures, SEBI has moved a long distance on system-driven disclosures. I think now time has come to modify these regulations to completely dispense with the disclosures relating to holdings of securities, as these are available with the depositories, and such depositories can make the disclosures with promptitude and full accuracy. As and when any change happens, there can be always exceptions which can be handled by way of exceptions. But this will ensure that timely disclosure, and therefore stakeholders can take informed decisions that reduces the burden on the people who have to disclose, and that also avoids avoidable penalties for non-disclosure. We find quite often people are being penalized because they came to know of some disclosure requirement, they made disclosure after 3 years, 5 years, all those can be avoided. Similar is the situation of enforcement. Economic freedom we are enforcing actually. This has several sets of gray, and there's a very high possibility that one may end up with either a false negative or a false positive, either of which can be extremely damaging. But nevertheless, let me make also a caveat that we quite often believe that regulators are standalone regulators. It is important to realize that for SEBI, it protects the interests of investment securities, promotes the development of market, and regulates. So therefore, whatever regulator does or regulatory capacity we talk about, it should not be limited, as Richa told about, we need regulatory capacity in the market, but even at regulators also, we must look comprehensively the kind of roles regulators have. So we do not have any kind of stand-alone regulators, or there's nobody who does not do regulation. I think I will stop it here. Over to you, Richa.
Thank you, sir, so much. Continuing with the narrative which you said, in these times where you have RTIs, where you have parliamentary committees, you have, very specifically public consultations by SEBI, committee consultations, etc. Do you still feel that more needs to be done on specifically accountability for regulators? Do you not feel that this is enough accountability being set for the regulators?
I just hinted at 2-3 things that when I say that we must know the responsibility of SEBI as an organization, its governing board, and different responsibility centers. The first point is that we must identify the responsibility centers to hold them responsible. So this is the beginning of the accountability arrangement we must have. I refer to regulatory impact assessment. This is also a measure of accountability. Every regulator is a mini state having legislative, quasi-judicial, and executive functions, and there are public interest concerns. Supreme Court has raised concerns. So we need to house these functions in a regulatory body. In fact, you know that our regulators are much more powerful than, let's say, Securities and Exchange Commission. So to avoid the concerns, public interest concerns, we must have, like, even if we don't follow the strict separation of powers, but we must have some semblance of that. Another aspect is that you just mentioned about RTI, etc. These are being done, but these essentially serve a purpose. But you know, I find that there's a society has a love and hate kind of relationship with the regulators. In normal times, the regulators are criticized for over-regulation, and they always ask regulators should have a hands-off approach. In unusual times, they are questioned for under-regulation and charged with allegations of slipping on the wheel. So there's a tendency to use one untoward incident to evaluate the performance of a regulator, ignoring its good work in possibly preventing hundreds of such events in the past. So until you, for want of a statutory requirement of the evaluation which can factor in both the achievements and failures, I think the event-specific evaluations have become the norm, and such evaluations do more harm as they result in a blame game, knee-jerk reactions, and often yielding suboptimal outcomes. So we need an objective, formal, periodic performance evaluation of our regulators. This has been engaging the attention of reformers, starting from second administrative reforms commission. I just mentioned about the financial sector legislative reforms commission, and earlier, you know, Mr. Damodaran committee, former chairman of SEBI, that had also recommended that each regulator should undertake self-evaluation once at least 3 years. And there's a growing literature now, the rationale for evaluation, performance evaluation of regulators, indicating that actually such exercise helps engenders good regulatory decisions, minimizes bad decisions, avoid repetition of mistakes, stimulates prompt course corrections, and more importantly, it ensures that regulator remains on the track. It pursues objectives and makes best possible use of resources what it has, and further, it also builds the credibility and the legitimacy of the regulators. Several frameworks are available internationally, but we need to, even though regulatory requirement is not there, on our own, we must volunteer, evaluate ourselves, and disclose to market. In fact, we all believe in a disclosure-based regulatory regime since the 90s, where the strategy is that we make full, accurate disclosure of information to stakeholders. And disclosures, as I earlier mentioned, typically relate to products like securities, financial services, or participants like issuers, intermediaries, or material events. But stakeholders also need information about the regulator and its services to determine if it is safe for me to participate in the security market. Similar to quarterly disclosures of performance by issuers and intermediaries, regulators must devise a means to disclose their performance on specified parameters, and which in the course of time be the framework for evaluation of regulators on annual basis or quarterly, some kind of basis it can be done. So there can be various ways to improve the accountability, but the most important of this is that regulators must volunteer themselves to build their own capacity, like regulatory impact assessment, to volunteer to assess themselves, disclosure about themselves. So several things they can do to earn the credibility and the legitimacy, and which is a long, long process to get. Thank you.
Thank you so much, sir. I will turn my attention to Mr. Gupta now. Sir, regulatory capacity can mean different things. One is a regulator's perspective and what more regulator needs to do, which has been very nicely articulated by Dr. Sahoo. So going now, turning the others to the other side, to the regulated entity, you have had varied experience being with SEBI, being outside SEBI, then coming back to SEBI, setting up your own company, proxy advisory firm, which works pro bono, but in the securities market. But so, my question to you is that, ultimately, the way regulated entities function also impact the investors, because ultimately, taking from cue from what Dr. Sahoo said, ultimately, it's all about the people who are investing in the market. What more do you think can be done for capacity building in regulated entities, and what's your experience in this?
Thank you, Sebi. Thank you, Richa. And I will start by saying that the biggest problem in our country is that there is some sort of an adversarial relationship between the regulator and regulated entities. The regulated entities are unable to see value in the regulation. So there is a failure or disconnect, because whenever any regulation is made, I, as a regulated entity, the first reaction is, oh God, more compliance for me. We do not understand that what is the objective behind the compliance. And the moment this adversarial relationship ends, and it is a relationship of mutual value creation, then probably all the problems will go. The second issue is this, the capacity. Now, the regulatory capacity has got many dimensions. So the question that I ask myself is the regulator knowledge-wise incapable? The answer is no. The knowledge is there. Is the motivation not there? The motivation is there. There are many aspects, in time is left, so I will not go into this, but the end result is this, that we need to do thorough analysis, we call it pathological analysis, and find what is there. Now, in one respect, I find the biggest problem, as Mrs. House says, there has been so many laws and very little enforcement of this. So I would always bat for a lesser number of laws, but stricter enforcement. But one factor which I find is very negative as far as I feel is the motivation at organization like SEBI, because of the action that has been taken by the agency, the law enforcement agencies against the staff of SEBI. This is a bigger fear builder. So everybody is under fear and unable to take a decision which normally would have been taken. So one aspect which has to be taken is to do, if you look at the history, in last 40, 50 years, there has been nothing against RBI. So many banks have failed, so many NBFCs have failed, so many frauds have happened. Not a single case against RBI. Whereas everything that happens day and night, SEBI is the whipping boy. So let us handle this. The second, as far as the regulated entities are concerned, most of the regulated entities are oriented towards tick box exposure. That means that whatever law SEBI has made, let me at least comply with that, without understanding why the law is there and how I can benefit from it. Or if the law is such that it is not at all beneficial, it should be done. So I would say it is a hand-in-hand approach from the regulator and regulated entity that will work rather than adversarial.
I understand your point, sir. So what do you think can be done to tackle this? So being less prescriptive would help, or will just, see, for example, I will quote from my experience of being in SEBI. There were a lot of laws which were very principle based, but we saw that people were just not following it in spirit. So we had to make them specific. So now that we have made it specific, I can understand your perspective. People say it's a checkbox, approach where they just do it to comply. So where do you think, do you think technology will help in this, or where do you think regulators should go? Whether they should be proactive in getting more regulation, enforcement, yes, which we are doing, but then, having too many orders, passing, orders in small cases, penalizing people for the smallest things is not the way to go. Enforcement means that you penalize the big guys for the big mistakes, and you take a slightly lenient approach per se by giving them warning or deficiencies, pointing out their deficiencies and policing them to correct their behavior. But there is no middle ground to it. So what's your opinion? How does a regulator achieve this middle ground to per se, to get at the optimal solution, so that there is a what do you say, there is a trust between both the regulated entities and the regulator?
So you have put the right question. The trust is the most important thing. And you're not alone in your experience. I also experienced at SEBI. Whenever we used to do something, they said that give us an order. I said, this is there in the spirit of the law. No, give us an order. So what on the thing that nobody at the regulated entity wants to take a risk, because probably it may not be liked by SEBI or not liked by the court of law. The other thing is this, that you rightly pointed out, that principle-based or rule-based thing. And I tell you, even in my current organization, we face this problem day in day, because when we write in our report that this is the spirit of law and the company should have done it, the company promptly writes that, look, there is this law, where is this thing? I have complied with the law. So we have to come somehow or other, move from the compliance culture to governance culture and see the value in it. And as far as your thing is concerned, that small orders, I would certainly say that let SEBI not pass 90% of the orders, but those 10% of the order which are the big culprit, they should be done fast and followed, so that end result is achieved. And otherwise, what is happening is this, I would say SEBI's effort and my effort and your effort will be useless, because our ecosystem is not such. Our legal system is such that all our efforts are brought to the knot because of the long delay and many a time of the orders which you find are very strange, which you can't logically or legally explain, that the legal system throws at you.
So continuing with the governance aspect which you pointed out, do you feel that a lot of things should be industry driven? For example, participation in voting, resolutions, etc. We find very less number of minuscule participation from investors in voting, etc. Do you think more innovations can be carried out so that investors are a bigger part of the process, rather than realizing at the last moment when they don't have any other way out? Do you feel more can be done from a technology standpoint in that area?
Yeah, I certainly feel this can be done, because look at today's position. Every problem regarding the voting has been solved, except the knowledge and convenience. There is, earlier you has to go to attend the meeting, spend money, time and something. Today, e-voting has solved the problem. But investor does not even have the knowledge. They do not know. I would say even me, when I started this company, I had no clue about the company law, because I have never studied company law. So I had to study what is the special resolution, what is the ordinary resolution, what is ordinary business. So the normal investor who invests in 100 shares, 200 shares or 500 shares doesn't understand anything. So he has to be provided education at his doorstep. And today, mobile is the most convenient method of giving any information. So I have been arguing that we should have a mobile-based app where all the information will be available to the shareholder regarding the share that he owns, what has been the announcement of the company, what is the meeting and what are the things. And we as proxy advisor can help by giving our report free of cost to the investor, so that investor can read and decide. And on the mobile itself, there can be a voting app, auto connectivity to the e-voting platform, NSDL, etc. And he can do it. So I would say the best method to bring investor to the voting platform would be give him a solution which is easy, economical and convenient.
Thank you so much, sir, for your ideas. I'll turn my attention to ease of onboarding for investors for making simplified KYC. So, SEBI has done a lot starting from 2008-9. I think we've prescribed KYC norms. The KYC norms are aligned with KYC norms so that investors don't have a problem. These are uniform norms. KYCs can be completed. No KYC, when I say, is know your client. So KYC, so when you onboard a client, these can be completed through physical mode, online, app-based. The verification can be in person or through a video clip. And you can also submit officially valid documents through e-signature, DigiLocker, and electronic signature. So these reforms have been coming and a lot of ease has been done. SEBI's also recently, amended KRA regulations to build in, a lot of system of control and monitoring KYC by KRAs. And, a lot of things has been done. Again, my question this is in continuation to my earlier question to Mr. Gupta, then I'll come to Mr. Sahoo, Dr. Sahoo. So, sir, if you see from a perspective of an instrument, of an investor in financial instrument, what more can be done, not just for securities market, but for financial market as a whole to ease this whole process of KYC?
Thank you, Richa. See, I would say the SEBI has done a lot as far as the securities market is concerned, but that's not enough. I, as an investor, or I, as a citizen of this country, have got various avenues for investment. One is bank, other is securities market, and real estate, and all other things. Now, today, everything is connected to your Aadhaar and PAN card. Why can't be there agency where I have to update my KYC once and it goes all across the system? Whether it is my deposit account, whether it is my security account, whether it is my trading account, all KYC should happen in one stroke. And today the problem is if I've got 10 bank accounts and I have opened it in 10 different years and 10 different months, so almost every month I have to do some KYC or other. I would suggest a system where with the Aadhaar and PAN linked, and all my accounts automatically linked because everybody requires PAN and Aadhaar. So one agency should update my account, update my KYC, and it goes to all my bank accounts, all my security trading account, all my demat account, all my mutual fund account, and I am happy. This is the one thing. The second thing I would say, I'm thinking beyond that. See, today, for every account, I have to do nomination. If my bank account is there, 10 bank accounts are there, I have to do 10 nomination. Security account, I have to do nomination. So this should extend to the nomination also. I should have a standard nomination automatically unless until I override. I may override a nomination for my other asset, but there should be standard nomination and there should be information so that if I die somewhere, so my family doesn't have a problem because they have everything in one page. They can go to agency and say what were all the accounts of my father and what were the something, and they will get data. Otherwise, today I have to keep them informed that this is my bank account, this is something. So I would say I am imagining a situation where everything is one click away and my family, me, everybody knows it and KYC can be done.
Thank you so much, sir, for those ideas. I now turn my attention to Dr. Sahoo. So do you feel that, we've done a lot of things, Mr. Gupta also has suggested some ideas, but do you feel onboarding of clients and simplification of KYC is enough or anything more needs to be done in this area?
I think continuing on what Dr. Mr. Gupta was talking about, I think actually KYC is an infrastructure for the financial market or securities market. It should be provided by somebody. It's like a public good. And once it is available, everybody should be able to use. Instead of 10 people doing the KRAs of different standards. Obviously, when 10 different people or 10 different agencies do, there will be difference in quality. So that means that somewhere the KYC process is weak, somewhere it is strong. So why should we allow the clients to come to market through a weak process? Why should we provide an arbitrage? If a person is somehow not desirable for the market, there should be only one entry point to come to market, not through 10, 20 different agencies adopting different standards. We had the similar problem when the listings was happening on the regional stock exchange. One exchange listed, another exchange did not list. And if it was not listed by one, it has to be undone. So this matter went to Securities Appellate Tribunal, and then the issue came that how can it be good when one exchange allows this issue is good for one set of investors and another does not allow, it is not good for that set of investors. So similarly, the KYC, I would consider KYC is an infrastructure, it should be provided as a public. Yes, over and above KYC, we know the authorities give so much of importance on KYC, elaborate arrangement, and also KYC registration agencies. But I think as much as you want to know the clients also would like to know the products they are dealing with and the people they are dealing with. So I think we have to now shift focus to KYP, know your product and know your participant. And today there's not much talk about that, except that some financial literacy programs are happening. And as the market becomes more and more sophisticated, products and participants get more and more complex day by day, the clients really struggle to do KYP. They need a helping hand for this. SEBI has data of every kind of scan any market participant has over 30 years. So can it not make a searchable database of all tainted people of his entire history available at one place, and when I'm deciding to go to a broker or somebody, a merchant banker, I must know who is this person, what has been his track record, and who are the people running this organization. So that will help me actually to choose who I can trust, rather than, yes, that person should know me, but I should have a mechanism to know that. Thank you.
Sir, so, taking from your answer, I saw a question where someone has raised a question about privacy concern. Will there not be privacy concern if SEBI was to put out this data, considering the data may be, say, 20 years old or, older, and does that person needs to be still punished for something which was done because the conduct was at that point of time and conduct might have changed? Do you...
There is no concern because SEBI has put out an order in 2005 imposing a penalty of 1 lakh. That order is available on the website and market is using it, and there are further databases built on that. But I'm only saying that all the SEBI orders are there over the last 30 years. Just put it in a searchable database. So where the privacy concern? Wherever there's privacy concern, it can be KYC matter or something. For that, the SEBI has a reasonable good arrangement, and in fact, the data privacy law is coming up. But when I say that Mr. X was imprisoned in this year, where is the privacy here? Everybody, the whole world knows that this person was imprisoned. This person was penalized. So I don't see absolutely any privacy issue.
Thank you, sir. I have a question from one of the participants. It says, what is the best way for a zero fraud business operation? From a regulated entity's point of view, a number of broker defaults have happened, and it has caused a lot of, losses to investors. So do you see what can be a way forward for a zero fraud business? While, Mr. Sahoo, you have articulated, establishing a database, etc. But to access that, people would need to be reasonably aware. Is there something more which can be done? And I think, perhaps Mr. Gupta can chip in if he has some ideas as to how can there be a zero business fraud operation, if there is any way to ensure that that is run?
I don't think actually zero fraud is completely a utopian idea. Do we ever have zero crimes in the society? Our Indian penal code written so nicely by the British people, and with so many, you don't find that kind of quality of writing. And our judiciary, we still claim that our judiciary is one of the best. Our police system, so all these are there, and we know these crimes keep on happening, and that's why we have this arrangement. But still, these crimes happen. But frauds actually is not something repetitive somebody does every time one comes up with something new problem, new kind of a new device. But do we have the right means of detecting and dealing with fraud? We need actually much higher quality of monitoring the transactions and markets, which gives we are able to detect. Actually, the enforcement is effective depends on the probability of detecting. If people feel that I can do this and SEBI has no capability to detect it, then they will do very liberally. But if they know that nothing can escape SEBI's attention, then they will avoid, except there will be two hardened kind of criminals who will still indulge in. So the ability of the SEBI to monitor, detect, notice, and strike on time, and the inspection investigation it does, the quality of such investigation report, which will stand the scrutiny of Securities Appellate Tribunal and Supreme Court. We have seen in criminal matters what happens, many things fall through because there are some loopholes in the investigation. So you have to improve the quality of monitoring, quality of investigation, and the quality of the adjudication orders. But never, I still don't think that we should, as a good idea to have zero fraud, but we should work towards that, but not have this, that is not achievable, but we should deal with that. And wherever possible, in fact, there was some instances SEBI has done disgorgement and distributed money back to investors. That should be the approach wherever, because of the fraud, somebody is losing money, get into as much as possible disgorgement, make good the loss of the investor.
Thank you, sir. And I think there's a last question which I will ask Mr. Gupta. Sir, can something more be done in the enforcement process? Because, again, going back to our initial discussion on being a balance between, rule making and prescription, enforcement obviously is the key for the regulator. But do you think there could be some ideas in which enforcement can be achieved, and what more can be done through technology or through any other means to get a better, get more confidence from the investor side?
Okay, Richa, before I answer this, I will add to what Mr. Sahoo was talking about the fraud. So similarly, the human race, there cannot be a situation where there is zero illness. There will be diseases there. The second thing I say that grief is married to the greed. So all the frauds have origin in the greed. As long as there is a greed in the human being, you are susceptible to the frauds. That is the. Coming to this question on the enforcement, I would say the problem with SEBI is this: we pursue all the cases of ABC category with the same zeal. There is no differentiation. Whether it is a problem that I failed to submit my statement of account in time, or I made disclosure of my shareholding pattern by delay, and whether I cheated people. So we got to do it in the ABC category, and we should concentrate more on the A category. Some sort of a B or C category problem should be done away within a simple measure, not going through the process of notice, then legal, and the person comes to the legal counsel and then takes 3 adjournments and all that things. So we got to cut down all the BC category issues with as simple as possible and focus on A category and pursue with the zeal, with a missionary zeal. That is how the whole thing happened. Because what happened today, the problem is this: our energies are concentrated more on 90% or 95% of cases where the ultimate penalty is 1 lakh, 2 lakh, or 5 lakh. But we have bigger cases where the same attention is done, which is done to the 5 lakh or 10 lakh cases. So we got to do something. And second thing, we got to do something like a summary thing, that if some small thing has happened, just a pure warning letter and that can go and do something. I think it will be a situation where you got to analyze the data in SEBI, that what has been the pattern in the past, and take a decision based on that. I would be advising without any data. So the actual thing has to be done by you guys, who you will analyze that how your energy has been dissipated in past on issues which were non-issues.
Thank you so much, sir. Thank you. I would like to thank Mr. Gupta and Dr. Sahoo for this enriching session, which lasted for, I think we have overshot our time, allotted time. Thank you so much for all the ideas and for all the feedback given. I'm sure there are people who will be listening in SEBI itself who will be willing to give a thought to whatever you have proposed and said. Thank you so much, sir. Thank you to everybody for participating in the discussion.
Thank you very much.
Thank you, sir. Thank you, sir. Video.
Thank you so much to the all the panelists and the moderator for joining us. And with that, we'll quickly share the screen so that the audience members can mark their attendance. Great. And as I have already mentioned earlier, we have already received more than 1,300 plus registrations for the Manthan Ideathon program. All the entries are across various domains, from investor protection side to the securities market development side to the market regulation side, and in terms of innovative ideas in terms of how can the integration within the financial ecosystem can be made with much more ease, with much more security. And with that, as I've already mentioned, there are prizes worth up to 5 lakhs which are up for grab, along with amazing goodies, as well as participation certifications for all the registered people. So make sure you are submitting your ideas well in advance, so that we also have sufficient time. The internal team also have sufficient time to evaluate them and get back to you with any specific questions that we have. Just to reiterate, in terms of who we want to get ideas on, and who are the relevant audience for this type of for the Manthan Ideathon program. We want to cater to all the startups, financial enthusiasts, MBA students, as well as professionals and students who have innovative ideas around capital markets development and innovations within the capital markets framework. With that, I would like to thank all the speakers who have joined today, and would like to formally close the second masterclass. And with that, make sure that you are attending the next masterclass, as well as we have some amazing, interesting speakers and amazing lineup of sessions that are there for the next two masterclass as well. With that, thank you so much, everyone, for joining in. Do reach out to the email IDs mentioned in the chat window below for any specific questions. Make sure that you're submitting your ideas on manthan.devfolio.com.